Good morning, everyone, and welcome to ShortSalePowerHour.com. My name is Fred Weaver, and I'm joined by my partner today holding the camera, Kevin Kauffman. We're with Group 4610, Arizona's premier short sale team. Thanks so much for tuning in today. As you've heard for the last couple of days, we had Coach Collard with us, our very special guest, which we always love to join. And thank you for letting those emails die down a little bit. Those 1,000+ emails a day were getting a little overwhelming. But I wanted to just share with you a little recap. On Monday, we talked about the mindset of short sales, and Coach Collard really drilled home some of the important mindset points for an agent that's working on short sales. Yesterday, I think, was quite possibly one of our greatest episodes we've had here at ShortSalePowerHour.com, and we talked about why a bank will never want to foreclose on a property. Coach Collard went through those reasons with you, and I encourage you, if you didn't see that episode, to check it out. Today, I've got in my hand here a little chart that we like to call monthly mortgage rate resets. And I know you're not going to be able to see it super well, but I'm going to hold it here for a moment while Kevin zooms in on it. This chart here is actually created and was distributed by a company called Credit Suisse, or Credit Suisse, depending upon where you come from and how you like to talk. But the important information on this chart that I want to focus in on is around monthly mortgage rate resets. Monthly mortgage rate resets. I actually, if you didn't know, have a background in loans. I actually, while I was in college, I started working for Washington Mutual Bank, and I actually worked at the rate lock desk for a couple of years. So I was the guy who essentially, when you wanted to lock in your interest rate on a home, I got to see all that paperwork. And if I was taking a stab, I would say for the 2+ years I worked at Washington Mutual, I would say at least 8 or 9 out of every 10 loans that I locked were adjustable rate mortgages, either 3-year ARMs, 5-year ARMs. Washington Mutual didn't have very many 7- and 10-year ARM products, but 3- and 5-year ARMs were their most popular, in addition to Washington Mutual's premier product, which was known as the option ARM. This little sheet here that we just held up for you guys actually shows the adjustable rate mortgages that have occurred all the way back to 2007, and this chart actually continues on through 2016. If you'd actually like a copy of this chart, what I'm going to ask you to do is, in the comment section here under this video, please leave your name and email address, and Kevin and I will send this out to you so you can use it in your listing presentations or share it with your office or whatever the case may be. But I want to focus in on some really important data here, guys. There's a lot of people that will come to Kevin and I say, hey, are things getting better? Is the market improving, or whatever the case may be? And I want to make it really clear that I firmly do not believe we're going to recover from this real estate drop, if you will, or the decline in values anytime soon. In fact, the reason I bring up this chart today is to show you that for the next 2.5 years consistently, we have a very high number of mortgage resets that are going to occur. For those of you that don't have a background in loans, I'll share with you real quickly that what a 3-year ARM means, or a 5-year ARM, that means that the interest rate is fixed for a certain period of time. So for an example, in a 5-year adjustable rate mortgage, that borrower got a fixed interest rate for 5 years. After the 5-year period of time, the interest rate actually has the ability to adjust. Now, it may adjust up, it may adjust down. It depends on several factors. And we might have some more time and share that with you guys a little bit in coming weeks and episodes. We'll see about that. But the important thing here to know, guys, is that there are a high number of monthly mortgage rate resets that are going to occur over the next 2.5 years, which in my opinion, and in Kevin Kauffman's opinion, is just going to continue to drive the market down even further. Now, don't be deceived. Some of these monthly mortgage rate resets will actually result in lower mortgage payments for borrowers, and that's encouraging and really good news. But understand that over the test of time, as the indexes on these adjustable rate mortgages continue to go up, they're at all-time lows right now, then we'll continue to see people's mortgage payments increase. And as most of you know, the majority of Americans live paycheck to paycheck. The majority of Americans do not have enough money that if they didn't get paid in a given month, they would not be able to survive. Pretty astounding information. So, we're not here to be all doom and gloom, but we are here to give you the real facts. And the real facts are, guys, that for the next 2.5, 3 years, we're going to continue to see adjustable rate mortgages reset. And in our opinion, that's only going to continue to lead to more people not being able to make their payments, especially as those resets cause them a higher payment. So stay tuned for the rest of the week. We got some really great things in store for you, and we're excited to share that with you. And remember, if you'd like a copy of this graph and chart, and you'd like to look at the numbers and see the billions of dollars of monthly mortgage resets that are going to happen in the next 2.5, 3 years, leave your name and email right here below in the video in comment section, and we'll go ahead and get that out to you right away. And as we like to end all of our episodes, Short Sale Power Hour. Kevin's not clapping.
I can't
Short
clap.
Sale Power Hour. Crush it.